Hello, hello, hello. Happy Tuesday, happy Halloween, everybody. How is everyone doing? How is Halloween doing? How is everyone doing? Good morning, Patrick. Thank you for putting all the news in here. Sterling. I'm just scrolling through to see what everybody's saying. Hey, good morning, Richard. No costume today. Actually, I'm going as a low volume YouTuber. There we go. Low volume YouTuber. Good morning. I got too much going on to dress up this year. Got too much going on, and it's cold here. It's 20 degrees with the wind chill this morning. I'm not ready for this yet. Ugh. So, hey, Patrick Sterling. Who else? Royal Palms. Hey, all right. Is that it today? What's Halloween? Nobody's tuning in to the Market Podcast? Well, we had some interesting numbers come out. Employment costs, benefits, and wages are all up this morning. And that actually surprised the market. That was a pretty big jump. The employment cost index, wages, bonds reversed on that. I'll have to see what they did because now we just got the Case-Shiller home price. Oh, year over year, expected 1.3 coming in 2.2. The just standard house price index year over year expected 4.5 coming in at 5.6. So you still have inflationary trends with wages, benefits, and with house prices. Next up, minor number, Chicago PMI 15 minutes after the cash opens, still expected to be deeply in contraction. At 9 a.m. Central, you have Consumer Board Consumer Confidence forecast to be down from prior. Then we have the Dallas Fed Services Index and the Revenues Index. So that's at 9:30 Central. And that will wrap it up going into the big day tomorrow of the Fed pause meeting. So that's where we sit right now. Good morning, Heinrich. Hey, Patrick, snow on the ground up in Minnesota. Yeah, we're going to get some this morning. It's going to blow through. We're going to get some snow, and then it's probably during trick or treating hours. It's going to be cold here. But we're supposed to get some more snow, lake effect snow, during trick or treating hours. So we shall see. Sort of stinks for the kids, unless your costume was like a snowman. So we Tesla still down. Apple, Nvidia. Remember AMD earnings after the close. We'll take a look at that. Microsoft is up. Healthcare, you got some stronger, except for Pfizer that announced earnings. Also, Caterpillar, there it is. Caterpillar announced. I know Sterling put that in there. They did a beat, but their order backlog is severely dropping and weakness from China. They talked about it. So that's driving. And Caterpillar finished a double top pattern and now is continuing down and is going to close below that 62.5. So no bullish, no nothing long term bullish yet. And then John Deere, it looks to be down in sympathy with it. What else do we have? Let me refresh the sectors real quick. So it's still healthcare, consumer, defensive, and comm services leading. Energy lagging today. Fed watch still for the pause. We'll do one quick refresh with I don't think it changed anything with the number for Wednesday. I just want to look at the other numbers. The other numbers still not climbing much with these numbers. Still, we have the locked in pause for tomorrow, but then we're still only a 33% chance is the highest for any other rate hike. So just paused for longer, still in fear mode, but out of extreme fear mode from yesterday. Good morning, Anissa. All right. We already talked Pfizer and Caterpillar. Again, we have AMD's the big thing I'm looking at after the close today. After the close. And remember, even with the bounce yesterday, Nvidia is still hanging out around that key breakdown zone. So AMD after the close tomorrow morning is not a lot. I mean, I'm paying attention to Kraft Heinz from an inflationary and consumer staples point of view. That's the big thing. And then tomorrow after the close would be PayPal and Qualcomm. So that's where we sit there. But we get a bounce. By the way, I forgot to mention a close above yesterday's high was a percent beat buy with cycles turning up. Now that's just for a bounce trade again. Remember, we have a lot of overhead resistance and still an intermediate sell signal was triggered last week. So the buy is so far a bounce only, with daily cycles going up and weekly. Now, if we can get some more traction into the weekly, we could easily see a bounce into the weekly rotation zone before another rollover play. However, you know, even with a best fit, sort of a best fit trend line, this is not the properly drawn trend line. This would be a best fit one. Even a bounce back to there, you know, would just be for another substantial rollover play. So what are we looking at today? Based off the percent B buy, which was triggered, I've now watched just a little thing. The most aggressive stop area, okay, we have this looking like a little possibly mini double top. The most aggressive stop would be a close below 41.51.25. The technical stop, there could be two of them: a trade below the lowest low before it was triggered, or a close below the lowest close. So, and it depends, you know, how much you want to give it. A close below the lowest close would be a close below Fridays. A trade below the lowest low would be a trade below Fridays. The most aggressive would be that 62.5. However, we do have a little mini potential double top here. Okay, so, and look at that, could be for a retrace gap fill. Look at that, straight to that gap fill. So if we get a 4-hour close below 41.6675, that triggers a completely valid mini double top. With the targets, you have a cluster right at the, look at that cluster also. The 62.5 with the first target, 41.51.25 area, right there. So, again, if, you know, I didn't mention it yesterday, but if somebody's in this from a long side, you start closing below that 41.66, I'd be then watching for the bigger pullback and then possibly reestablish a bottom. Remember, from looking for a more substantial bottom, you can either even get another rollover play before trying to establish. That could even come back and reestablish a potential bigger double bottom, and then we could get another push higher before the more substantial rollover play. I'm expecting more so this bounce to last for possibly into Thanksgiving. Now, does that mean we have to go straight up? No. Remember, there's two kinds of corrections: sideways and a bounce. So far, this is roughly just a sideways correction, even with yesterday's price action. When considering the bigger picture, this is nothing. This is nothing. So we could chop back and forth with a slightly upward bias going into the next couple weeks. If we really break to new lows, though, that would be show a lot of market weakness. Why? We're sort of in the sentiment where we get the bounce into this time of year. We're at cycle lows on daily and weekly. We've come off a pretty big drop since July. However, if the market can't get any traction here, it means there's a ton of weakness. When something doesn't follow through, and we could have a potential that, remember that Elliott wave, short-term buy area in here. But when something doesn't happen, that also gives you information. For example, on the last time I was on the podcast, I said gold doesn't normally make a V-shaped reversal. What is this? It's a V-shaped reversal so far. That gave me a lot of information, because gold, look at this strength. We got one pausing bar, two pausing bars, only 3 red bars really in this whole run-up. Does that mean it can't pull back at all? No. But gold is holding up. Even with bounces in the markets, you're not getting any kind of pullback. And gold does not normally make a V-shaped reversal. So this is telling me something, that there is a lot of underlying strength in gold. So from a trading perspective, from my trading perspective, gold I have to be more bullish on, even more bullish, and consider the possibility that any retracement could be shallower. When something doesn't happen, that's also information. So for this, if we were to substantially close below last Friday's lows, you know, we could easily continue to see the pullback into the 50 to 62.5 before a bounce play. But so far, we have some follow through. Now I'm watching that double top area. The NASDAQ was also the percent B. This is sloppier. This is a little messier and can't really be traded as a double because of this hitch move in there. So I'm still going to be watching this point right around 14,300. We start breaking below 14,300. I'm looking for the gap fill to 14,270. And then I'll be looking, so far this is more of a channeling flagging move from the NASDAQ. You see here, right in there. But if we start breaking down and we get that gap fill, we could be rolling over into a more substantial bottoming pattern. Also, NASDAQ still trying to roll up on the weeklies. I didn't go through the upside, did I, in the S&P? Let me go back there. Sorry about that. I got sidetracked by gold. Gosh darn, gold. The next minor levels, if we eke out something this morning, because remember we have Fed tomorrow, 4201, 4201, 4205 to 4206. Now 4205 to 4206 is key because 4206 is the 50% from this last minor sell-off. So that's really going to be key, and that's from the last minor sell-off, not the whole big key sell-off. All right, from the NASDAQ, I'm also going to be more so watching the upper end of this channel. The upper end of the channel would be around 14.5 on any push higher. Again, the first key area of support is about 14.333, then 14.300. We start breaking below there. Again, for the gap fill, we break below there. That's where I'll look really. We got to see where that 62.5 is, 14.266. So we get a 4-hour close below there, which is right at the gap fill area. I'll watch for the pullback, potentially the 87.5, and trying to form a stronger bottoming formation. Hey, good day, Christoph. Just crashed my gold thesis. That's why I'm here. What I crash your gold thesis with? Gold, I mean, we could still pull back, but when the market doesn't do something as expected, that is information. I still need a continuation buy pattern at this point. But it could be a very shallow pullback. We shall see. I'm prepared for a more shallow pullback because something's definitely changed with gold. The Dow also, remember that. Just like when doubles don't work, it's also people are like, oh man, that double traded stopped me out. Well, fine. That should tell you that the market is strong the other way. Okay, that's also key. So keep that in mind. It's like, oh man, I had a losing trade. Did that losing trade give you information that could help you make the next trade even stronger? Because look, when something's at a decent probability and it can't even get to the first target, like in a double, that should tell you something. That should tell you something. That at least tells me something. The Dow is also percent beat buy, so the same thing. Remember, these are into the rotation zone only. The Dow did not have proper reward to risk. The Dow does not have a double. But the Dow key pullback area, if we start breaking below about 32,940, 32,935, 32,815, then 32,713 are the key areas. To the upside, the next key area I'm looking at is the 50% retracement from this overall down move right here, 33,360, which is a key resistance shelf. So if we did turn around and break above today's high, I'm still expecting choppier to negative price action. But that would be the next target, and that could even be utilized for tomorrow. The Russell, which has been pathetically weak. So this, look at this. Yesterday still gets selling pressure. Still gets selling pressure. Now this I was watching for a potential double, but this coming down into nearly triple territory. Russell, key resistance around 1670, key support around 1645. Other than that, in a chop mode. Would not be looking to the Russell unless it starts breaking down below about this 1640 area. That's the first thing to look on the short side. The VIX closed below 20 yesterday. And still, there's no fear in the markets. The markets are S&P sort of flat, NASDAQ pulling back a bit, but it's not spiking up. If we start spiking above 20, I'll shift to more of a pullback trade than a choppy trade. The DAX still has a potential double bottom, spiking up to this key resistance area. It really has to get through about 14.9 to get anything going, and that's still a minor bounce pattern to the upside. The notes, which did not confirm, I think the yield confirmed. The notes did not confirm yet the double, and this was the reaction. It was riding higher, and then you see this is the reaction from those numbers coming out. The numbers coming out, the wages. The wage was still inflationary wage print. That's the reaction to it. So nothing's really changed with the notes yet. The yield did confirm, but not trigger. Personally, with the rotation zone in the way I utilize, if this double top remains in place, I would wait for the trigger below the rotation zone on a closing basis. That's just a little tip for people who are trading these against the rotation zone when it's that close. Other than that, that's the only thing I'm watching from the bearish side on yields. If we push back higher, I'll keep watching for the next bullish breakout. The 10-2s, still pulling back. We do have a potential mini double top, which could stop the bear steepening for a while. We stop the bear steepening, we could get a little more traction in the market in the short term, and then I'll really start looking for the resumption of that shorter term bounce. But that would need a close below 25.3 basis points to the negative side. Dollar index still in chop mode. Not really paying attention to much here yet, unless we get the close back above 106.30 or a close below 105. Crude, there's been a lot of buying pressure down here. The only thing, if we break below 81.50, I'll watch for a quick return to about 78.50 to 80. Other than that, there's not a fantastic pattern yet. Shorter term, I'll watch for a break above 85.60 on a closing basis. Natty gas, pulling back, holding the support level, and rotating back up. So natty gas still remaining stronger. Gold we already looked at, still sideways correction. If we've tapped off the 75, we break above the 2020, 2052 is the next target. Remember, and we've closed above that 62.5, so that's the next key target area, which would retest the highs from April and in May. All right. So, where we go? Oh, hey, options 22. Thank you. There was your thesis was starting to think that the run up in gold last week was a short squeeze. Look at this way it's holding up. Now we are at overbought and cycles at the top. But look at everything it's held up against. It's got to do some serious correction now. One quick thing, and then I'll get off of this. Let's just see here. 8.4. So you still have a potential double top here. So in order for your thesis, there you go. But look at this. I want to show you something. Let's even say this double top triggers. Okay? Let's say it triggers. That's still not a huge pullback. Look at that. That's still only a 50% of this up move. And still, look what that is. That's still holding. The only thing that would really change now, if I'd be more patient if this does trigger and wait for this to possibly reconnect with the 50% and then watch for another buying pattern there. However, unless this gets a close back below this key support base now, and that would be close below the 50% and continuing on from the double, I can't watch for a pullback down here. And this double may never trigger. Just wanted to, I forgot to do that. The tens. Now I'm shifting to the yen. The Japanese bank, central bank, said they're looking to ease that 1% rule on the 10 years, or the longer term, I should say, longer term notes and bonds stuff. And look at this, skyrocketing up. Gonna tackle that 1% quickly. And with that, first there's a little reaction down. And then today, now we do have a potential mini double top. Doubt it will trigger because I'm now watching this to take out roughly 151.95. Which 151.95, remember, that's the highs from October 22. This could get very interesting from a yen perspective. Very interesting. And the next target above that would be 155. Euro. The euro coming up. It was spiking up higher before the stronger wage numbers came out. And we've had some ECB stuff still. We're in this channeling flag pattern. So not the channeling double flag pattern still not hit the first target. Remember, those are the lower probability when they turn into a flag pattern. Pound, there's still not much going on. We've had the little mini double trigger hitting the first target. Look, right to the first target. So the new invalidation point is on a 4-hour closing basis below 121.18. That's the technical invalidation point. The Spideys. What do we have? We still, on any break today, we're trading 415.78. Any up move, the target is 417.55, which is the close from last Wednesday. And then I'd be looking about 418.50. Key support. First, I actually use the key first area of resistance. This is going to open down a little, being at 416.60. Yesterday's close being 415.59. So that would be the first level of support. And then below that, I'd be looking at the harmonics coming up from the lows. Now, you're going to have to update these if we make a new high this morning above 416. 416.68. But the key support is right at this 50% harmonic, 413, 412.90, 413. Start breaking below that. Your minor target's 412, but then I'd be watching for that gap fill, especially if we get a 1 or 4 hour close below 412. So that's what I'm looking for there. And on the Qs, same little thing here. Remember, we still have a gap down left behind from Friday. We have yesterday's low at 346.45. We're trading 348.80. So first level would be 346.45. Then I'd be looking at that gap fill to the close. But before that, we got to see where the potential harmonics. And on the Qs, you do have a potential, let's double. So that trigger would be a close on a 4-hour basis below 346.45. So that's a very key level to keep down. 346.45. You got the gap fill. Then the first target, 344.50. The second target, look how it lines up with harmonics too. Second target at the 87.5, 340, 344. Final target is technically cutting through the wicks, so I'd be focusing on the first and second targets primarily. There's no guarantee that's going to trigger, though. To the upside, if we do break above this 350.50 area, the next minor target is about 351.90 to 352, and then 353.25 area. Good morning, PMG. Is that a what do I think of gold miners? I really haven't been keen on them right now. They've bounced, but here's the key thing. Gold miners is trying to do a really sloppy inverse head and shoulders. I'm just watching for gold miners to get really above about 30.50. If gold holds up and gold miners gets above 30.50, other than that, that's my little thing on gold miners. Tesla, which lots of selling pressure in here yesterday from Tesla. Lots of selling pressure. Looks like there could have been, this was some substantial, looks like there could have been some potential Elon sales. I know we're open right now. Sorry for taking so long into the open. I'm still watching the targets for the downside with the doubles. Any rallies at this point, I'm keeping an eye on the 4-hour rotation zone. First area is about 205.75 to 206, and then we're looking back at about 214. Other than that, key next major target 179.35. Let's peek in at the S&P at the open. S&P, remember AMD after the close today. S&P, not a lot of strength going into the open. Let's see what the tick's doing. Come on, give me my tick. And again, that's 600 only. 600 only. There is just so. It's got to really get some strength above 600 before I get into bullish mode at all. I'm leaning choppy to bearish at this point. Choppy to bearish. Let's just check the NASDAQ. I mean, we could see some reversal days. It's unless we get a really negative tip going, I can't go fully bearish mode, or unless we trigger some of these bearish patterns because of the Fed meeting tomorrow. So, and remember, it's still an inside day on the NASDAQ. Inside day so far. No, it's not technically on the S&P. It eked out a new high. All right. Tesla completed. Tesla hasn't completed anything. Tesla has a long way to go. It's below the 200 also. I'd be watching for rollover plays in Tesla. I would not be aggressively bullish. All right. With that, we'll have to take a look. You want to look at URA? URA still holding firm here. URA still holding firm. So it's just basing. Keep an eye on the weekly rotation zone. If URA gets a close below 24, then I'll start watching. Then I got to go for bigger pullbacks. Other than that, it's burning off. Look, it came out of very overbought condition. Still holding about the middle, and the weekly cycles are getting to the bottom. So uranium, I'm still watching for continued push higher. All right, with that, I shall talk to everyone later. Have a wonderful trading day. Happy Halloween, and I'll see you all tomorrow. Bye for now.